Hey guys, welcome back to the channel. Just landed in Las Vegas. I have a work trip this weekend, so looking forward to dropping this video and sharing some of the pearls that I saw today, because I definitely saw some massive reports that connect macro to micro signals in the market. I want to share it with each and every one of you. Get your thinking on this as well and see if you see it the same way I do. But before we do that, I just want to share a kind of broader public announcement, because I've gotten a few alerts from members of the community that they have received emails from me proactively asking for either to do some type of action, or maybe click a link or to respond something. And I want everyone on this channel to know that is a absolute scam. So please, if you receive a proactive email in my name, just delete it. Don't do any action with it, because I will never send out a proactive email. I do respond to emails if you send them to me, and I respond to a number of emails and actively right now with many members of the community. So if you send me an email, I will respond. I'm happy to engage in dialogue, but I will never send anything out proactively. So please know, if you get something from me, just delete it. I'm also working to clean up all the spam that we see in the comments. So hang in tight. Just continue to drop the comments, continue to engage, and I'll work on the back end to make sure we block all the scammers. But let's jump into the video. Let's talk about the signals that I want to share with you, because if you haven't seen it, there was two massive reports that focused on the AI infrastructure build out that were dropped by a premier research group called Dell'Oro, one on June 10th and one kind of late last night that hit the news wires today. And I think it tells us everything that we need to know about the growth that we're going to see in this sector, and just kind of the demand that we'll see continuing to move forward. I think it's also helping us explain some of the growth rates that we're seeing with certain stocks, not only today, but this week overall. So let me pull up the first one. And guys, if you haven't seen it, you can see the Dell'Oro Group. They do a ton of different reports across tech, across semiconductors. If you just Google their name, you can find a number of different reports. But this is the one that was dropped on June 10th. And this was this was kind of the macro signal, I would say. This was telling us, or giving us an update about the massive amount of money that is going to be spent in the second half of this year for the data center build out, and the commitment that the hyperscalers are going to have. You can see the headline: AI infrastructure build outs and memory cost inflation drove data center capex higher in the first quarter of 2026. But look at the subheader. They're saying spending is going to accelerate even more in the second half of this year to account for NVIDIA's Rubin ramp overall. But let me pull up the next slide just to give you some of the headlines. You can see it. Oh, sorry. Oh, no, I lost control. There you go. Some of the headlines overall. It says, despite exceptional strong spending in the first half of 2026, we all should expect that capex growth is going to accelerate even further in the second half of this year. If you look at the other two bullet points that I highlighted, it says the global data center capex was raised to more than $1 trillion by the Dell'Oro Group. So they are upping the capex spend to $1 trillion overall for this year. And it's based on 4 hyperscalers, or 4 kind of cloud providers. You can see them listed: Amazon, Google, Meta, and Microsoft. They are saying that they will have a data center capex increase of almost 80% this year, which will drive us to a $1 trillion mark. So that was a massive macro signal in the market. It's telling us we're going to see a huge influx of cash into the market, but it didn't tell us exactly where that cash was going to go. Well, today, the second report dropped, and it gave us a little more insight to where that money is going to be spent. So this is the second report that was dropped today on June 17th. It actually hit the news wires today instead of last night. You may have seen it last night. I picked it up this morning. But you can see it focuses on data center, IT, semiconductor, and component revenue. And it mentioned that in Q1 of this year, it increased by almost 120%. And the subheader: AI infrastructure expansion, rising memory prices drive data center IT component market growth. And let's jump into some of the details here. I just pulled out a few. I want to call out these paragraphs. You can see worldwide revenue for data center IT, semiconductors, and components, servers and storage systems, they increased by 116% year over year in the first quarter of this year, propelled by ongoing AI infrastructure expansion and rising prices. The second paragraph says, while AI accelerators have been the primary growth driver for over the past several quarters, DRAM contributed the largest share of revenue growth in both relative and absolute terms in the first quarter of this year. And also it says that, NVIDIA Blackwell platform continued deployment of custom accelerators from hyperscalers. This is going to drive strong demand across the broader component ecosystem. Deployment of AI infrastructure is also boosting demand for adjacent technologies, including HBM, storage, and high-speed networking. And the things they call out in their bullet point in this report is, I mentioned that data center semiconductor and component is on track for a triple-digit growth full year of this year. The ramp of merchant and custom accelerators drove higher demand for adjacent components, including HBM, high-speed back-end NICs, storage demand, and benefited from a rapid expansion of AI infrastructure. NVIDIA remained the largest vendor by total revenue and is followed by Samsung and SK Hynix, but memory vendors benefited from rising DRAM and NAND prices and growing HBM adoption, while cloud service providers deploying custom accelerators, CPUs, and networking silicon gained market share. So those were the two big reports that dropped over the last 7 days or so, and I think that helps us connect the macro to the micro signal. So we knew there was going to be an influx of cash, but where was it going? And I think this report today gave us a framework exactly where it was going. The market is no longer speculating on hypothetical future orders. Today's follow-up report from Dell'Oro proved that the $1 trillion capex wave is actively being spent on physical hardware, material science, and specialized connectivity. So today's video, we're going to break down why the foundational layers of the AI build-out just caught this massive institutional bid. And I'll proactively address the skeptics who think that I may be overreacting to this report and that this is just a one-day flash in the pan or just a strong day in the market overall. So I want to talk about that proactively. And then the last thing I want to do is review the absolute battle of conviction that we saw with Micron today on the tape. So those are the three things we're going to focus on today's video. If you haven't done it though already, make sure you hit like, make sure you hit subscribe. Let's jump in and talk about where that money is going to flow and what kind of the three-tier architecture overall. So guys, today's report that we just reviewed from Dell'Oro provided us with the master blueprint for this hardware cycle, because their senior research director, Baron Fung, who wrote that report, he explicitly pointed out that the aggressive ramp of NVIDIA's Blackwell platform alongside the custom hyperscaler silicon, it's going to drive an unprecedented demand surge across the entire adjacent component ecosystem. And this historic capital injection will not be random. It's going to go into certain foundational layers of the AI infrastructure build out. It's going to directly get fueled into, in my opinion, three distinct non-negotiable architecture tiers that directly dictate the cost and the performance of every modern server and storage system. So I want to walk through the players that I think will be beneficiaries from this capital influx into the market. And you're not going to be surprised by these names because they're names that we've talked about in this channel many of times. But let's jump into it. Let's talk about the first one, because we know in that report called out that when you see you see component revenue expanding by almost 120%. Just know that is due because the physical manufacturing supply is running at absolute capacity right now. And you can't run that capacity without Taiwan Semiconductor. So Taiwan Semiconductor didn't catch the biggest bid today. It only went up by about $6, 1.5%. You see in the after hours, another $6.50 or so on the board. But you cannot print custom hyperscaler accelerators or next-gen CPUs without TSMC's advanced nodes. And the other company that you absolutely cannot achieve this with is ASML. So you cannot achieve sub 5 nanometer logic density without their lithography monopoly. And take a look what they did today. $62 gain, 3.5%. After hours, they're picking up another $52, another almost 3% on the board, at least when I pulled this after hours view. So it was a strong day for them. And the other one I want to get into is all around advanced packaging. We've talked about it a lot on this channel. So Amkor. Amkor didn't move today, but it's had significant moves over the last few days. Remember, we recommended this stock when it was like high 30s, low 40s. It's up today, got up to about $94 on the intra high, almost 95. We've seen it get to the 52-week high was about $96, $97 for the stock overall. The after hours were moving a little bit more, but just know that this company is critical when it comes to advanced multi-die packaging. And without them, you're not going to be able to bond high bandwidth memory to logic dies without this powerhouse we see in the market. They catch all of TSMC's spillover. They also just signed an arrangement with TSMC. You may have seen it was a $10 billion partnership out there in the Silicon Desert in Arizona, where their fabs are essentially right next door to each other. And then the last two in this layer I want to talk about are two that we talked about earlier in the week, just based on the wafer fabrication equipment report that came out and showing how bullish that was going to be. So Applied Materials and Lam Research are going to be the two that have been moving significantly. Applied Materials was up $25 today, almost 4.5%. The after hours, you see, it's almost another 3%, a $16 gain. The stock closed at $5.93, got up to a 52-week high today of about $6.24 overall. So this is moving very well. Lam Research as well is another one. Guys, these are like the toll booths. I would say these two stocks, if you don't have them in your portfolio, put them in your portfolio, because their high aspect ratio etching, depositing, and material engineering tools are mechanically required to manufacture these multi-layered dense silicon architectures. They own the physics layer of this cycle, these two stocks. So Lam Research didn't move as strongly today as Applied Materials, but it's looking really nice in the after hours, another almost 3% across the board. So those are the foundational, kind of the physical tool layers, I would say, the picks and the shovels. And I want to get into kind of the networking fabric next, the connectivity fabric, on where I think we'll see some movement or where this capital will rotate to. And one will be Broadcom. So you know that I am bullish on Broadcom. I maintain my bullish stance and conviction on Broadcom, even though it's dropped quite a bit. It was at 492 or 495, I think is his 52-week high. We see today it closed at about 393. In the after hours, it's getting close to 400, but I just believe long-term that we're going to see Broadcom come back overall. They are the kind of the gatekeeper of high-performance silicon switching. So I just continue to be bullish on this stock overall. It got up today. I said, you can see 393. I think it will continue to just do this slow build, as we'll see day after day. I just think Broadcom will make it back. They've been kind of unnecessarily hit. The other one I want to talk about that is massive in this layer, and it's been moving tremendously. The next two, kind of Credo's had a nice day. It was up $10 today, 4.25%. The after hours, it's up by 730. You can see the stock closed just about 250. So we're still off our 52-week high of 270 across the board. But Credo is a important player in here. Now they jumped, as you can see, almost 4.25% today. They provide the high margin active electrical cables that are required for dense, power efficient intra-rack routing. The other one I want to talk about that's been moving significantly, you may have noticed this, is Astera Labs. So Astera Labs is up 3.6% today, about $13. We see in the after hours, it's up another kind of 2%, another $8. That stock has been moving. I originally recommended this stock. I think I bought this stock back when it was like 140, 150. So it's essentially doubled in performance from where I've gotten it. And it's hit a new 52-week high today, got up to about 394 across the board. So Astera Labs is absolutely critical. They have a near monopoly on the PCIe Gen 5 and Gen 6 retimers that regenerate signals across the dense nodes. So they are an important player here, and capital will rotate into these. And then the next section I have to get to is just a memory player, because when you take a look at what the report said today, what Baron Fung, he dropped just a massive data point in that report. And I encourage you to go read it. But what he said, and I'll quote, is that while AI accelerators have been the primary growth driver across the past several quarters, DRAM contributed the largest share of revenue growth in both relative and absolute terms. So let that sink in. Micron didn't just grow, it outperformed the accelerators themselves in absolute revenue contribution. Elevated DRAM and NAND pricing paired with blistering adoption of HBM has completely shifted the balance of power to the memory suppliers. And so this structural pricing power is why Micron surged 2.25% today, and it closed just at about 1,044. It's all around their advanced HBM3E and server DRAM lines that are fully sold out, giving them just absolute leverage over the cloud billing services. Furthermore, remember that Dell'Oro also had a very bullish comments around the storage cycle, and we've seen Western Digital just go crazy this week across the board. But Dell'Oro noted in that report that storage capacity demand benefited immensely from the rapid expansion of AI infrastructure, because that requires massive hardware tools for both data pre-training and post-training workloads. The enterprise storage capacity crunch is the exact fundamental fuel that has supercharged Western Digital. They grew by $31 today, so it's about 4.5%. Remember, it was 16% on Monday. I think it was another 4.5% yesterday, 4.5% today. This stock has been blistering It's at 412 today. In the after hours, when I pulled this, it was up another $25 I said 412, 712, sorry. And in the after hours, it's at 737 across the board. So Western Digital's high capacity enterprise HSDs are foundational. They're a foundational layer right now upon which these trillion-dollar data lakes are going to be physically built. So those are the companies that I think are going to catch all of this capital coming in. And just to kind of remind, TSMC, ASML, Amkor, Applied Materials, and who was my own Lam Research. And then we look at Broadcom, Credo, and Astera Labs, and Micron, as well as Western Digital. But I want to just talk about what I mentioned in the beginning around just this belief that this is just a one day. Like, let's address the bears and the skeptics straight on, because I think what we'll say is the bears and the retail skeptics, they're going to say that we are over-interpreting a single strong day that we see in the market, that this is just a headline-driven pump that will fade tomorrow, most likely. And I want to tackle that weakness head on, right on the channel, right on this video today, because if today's move was based on a vague rumor of a retail option squeeze, I would agree with the bears. I would agree with the retail skeptics out there. But today's price action wasn't a sentiment shift. It was the formal market recognition of hard, backward-looking, forward locked-in revenue. When Dell'Oro reports 116% surge in component revenue, they are tracking the physical unit shipments, the capacity allocations, and the locked-in pricing contracts. This isn't a one-day trade. It's a lagging market repricing of a leading fundamental reality. It means that the upcoming quarterly earnings blocks, the prints that we're going to see drop on the street from Micron and in the future with Western Digital and Broadcom, are going to be fundamentally insulated. The revenue has already been generated. What we saw today wasn't a speculative overinterpretation. It was Wall Street adjusting the forward valuation models because institutions realized that they were pricing physical hardware layer too low. And now let's jump in and take a look at the tape from Micron. Micron was the absolute main event of the day today, in my opinion. It was the battlefield of Micron, as I termed it in the beginning of the video. But if you want a masterclass in how intense institutional demand operates behind the scenes, you need to study Micron's candle pattern chart from today. So let me pull that up. We can look at it together. This was taken right from TradingView. And I want to just we can walk through some of the action that we're seeing across the board. Because look at this intraday price action. We could see it was driven directly by the realization that DRAM and high-density memory hold the ultimate structural pricing power in this trillion-dollar build-out that the Dell'Oro Group shared, the report that they dropped into the street. Smart money piled into this stock. Micron exploded vertically in the afternoon. Take a look at that, clearing past all previous resistance and printing an absolute all-time high of almost 1,094 overall. We saw it was knocking right on the doorstep of that psychological $1,100 level for the stock. It almost broke through. I was watching it. I wanted to just see it crash through the $1,100 per share. But look what happened next in the little final minutes of the regular session. As broad index rebalancing and late-day macro volatility shook the NASDAQ, algorithmic selling hit the tape. It hit across the board, and we know it goes right after the stocks like Micron that have had massive moves and have liquidity baked into it. You see some profit taking across the board. So we saw a wave of retail stop losses that flushed the stock down from that peak of almost 1,094, forcing an artificial rapid drop to close the regular session at about 1,044 overall. It was a modest gain today, a 2.27, but I think the tape shows us it was a hard-fought gain for the stock overall. I'll take that 2.27 across the board. To a retail amateur looking at this daily candle chart, it looks like a late day rejection for this stock. They probably think that the bears won in the afternoon. But if we need to look at what happened in the after hours, I showed it earlier on the investing.com slide when we were going through the foundational layers. But Micron is up. It's trading at about 1,077 right now. It's up over 3% in the after hours. So the institution stepped right back in after close, and they accumulated more shares, and we're seeing strong conviction in the after hours. So I'm thinking we're going to see a nice gap up tomorrow at the opening bell across the board. Institutional desks, honestly, they use this kind of chaotic that you see on the screen here, this chaotic end-of-day market flush as an artificial liquidity event to accumulate cheap shares of this stock. They are aggressively positioning themselves ahead of the June 24th earning print that we'll see, because today's Dell'Oro report it showed us and it proved to us that Micron is sitting on a golden mountain of high margin revenue. So to all the members out there in the community out there, the playbook for the upcoming sessions is clear. When macro headlines cause a intraday wobble, do not let the retail crowds panic, shake you out of your core architectural convictions. The data from the June 10th report, it told us that a $1 trillion wall of capital is real and it's going to move into the market. We'll see a massive influx into the market. The data from the June 17th report, it proved that the capital is flowing directly into the pockets of the memory, the connectivity, and the equipment makers that are across all of our portfolios and stocks that we track each and every day. So let me know in the comments below, did you use midday today, the Fed dip, to accumulate more Micron and Western Digital, or are you holding your position steady for the next leg up? Hit the subscribe button, turn on the notifications. Appreciate you guys watching the video. Let me know your comments below if you enjoyed this, what your thoughts were as well, and I'll see you in the next one.